Hey guys, welcome back to the channel. In this video, we're going to go over some technical analysis on Amazon and Tesla. We'll also check in on ZNOG with the charts and see what I think the price will be potentially by the end of the week. Before we get into it, just to reiterate, guys, not a financial advisor. Make sure that you do your own research. Make sure that you smash the like button, subscribe to the channel if you enjoy our content. Hit the notification bell, that way YouTube can let you know every time we release new content. So let's get into it, guys. I think Amazon is potentially getting set to explode here and past 189.77 and potentially test the $200 mark here. As you see, the golden cross breakout indicator did just cross over, and that typically means we're about to see some increase in volume, and that's a great sign because we're right at the tip top of the fib level and the 189.77, which was the major resistance level we needed to see it bust through. So if we can get through today 189.77, let's say we get to like 190, and then we use this, or 192, 193, something like that, and then we use this as support, great sign moving forward, especially with this happening here. Now they can be a false breakout, obviously, if they get some selling pressure coming down and then they break below that, then obviously this is off. But typically when we get one of these signals here, the golden cross indicator, one of these light up blue green arrows here, typically says we're about to see some increase in volume, about to see some buying pressure coming in, and we should push forward and go higher. So let's look at the daily on from January till yesterday. Kind of sort of the same thing in a sense, but already we've been crossed over on that golden cross. As you see here, the longer term golden cross, and we crossed here and we were at about $100, and we got all the way up to now we're almost at $200. You got to listen to those signals and listen to those technicals, because that was such a good signal whenever that came out, and then you see we've just been rolling ever since. So we did cross over here to longer term daily from bearish to bullish, and it looks like we're kind of potentially just getting started. If we see some momentum here and we bust through here, then we should see $200. Now, I'm not saying we won't sell off past that point, but it's really trying. Now, if we don't get it here, if we get rejected again at the 189.77 level, then the run may potentially fizzle out, and we might just trade back and forth in this channel. We might come down and retest that 172 level or something like that. But just kind of keep an eye on Amazon coming out the gates today. And of course, it depends on the overall state of the market as well, right? So if the markets are spooked by the Fed or something like that, then that'll play a part in it as well. Tesla actually did have the golden cross breakout. However, they just got a sell signal. So this is an example of it's not always 100% accurate, but if it does hold up here, we get some buying pressure and we get through 192, we could really start moving for Tesla, in my opinion, and come up and blast past that 208, and then 225 is your next level that you're looking for. Okay, so I think from here, if we get a little bit of buying pressure and we get some volume, I think 225 is very doable and very easy, in my opinion, for Tesla in the short term. Now let's take a look at the daily chart dating back from January to yesterday, and we still actually, guys, honestly have not crossed over longer term on the golden cross indicator. So once this blue line crosses over this red line here, and I think once we get to about 225 to 230, these lines are going to start pulling close together. Once this crosses on the longer term, Tesla is really going to start moving, in my opinion. So something to keep an eye on, no doubt, on Tesla and Amazon the rest of the week. Let's check in with ZNOG. We did break below the 6-cent mark, and like I said in a couple of my videos, I do think now we're going to slide down to probably 5.5 cents or so. I think this is an easily doable to get down here, but I think we'll bounce off of there further well, because you see we are actually pretty close to undervalued there, and if we get to that point, we're going to be really undervalued. People are going to come in and buy these shares up at this level, whether it be for longer term holding or just a small pop, and swing trade move to the upside. So that's something to consider as well. We did confirm that golden cross breakout. However, with it pulling down into the fives, I think that's going to go away. It looks like, or we're going to kind of fight to keep it going, but it looks like that's not going to be the case. We're going to go back down, and if we break past this, guys, you could see 4.5 cents on this thing here sometime in the near future prior to the annual shareholder meeting, in my opinion. So you just got to make a decision on what you want to do with that. Take it as you will. The overall chart, as you see here, we are basically at kind of a crossroads with the golden cross breakout, and it looks like we were about to get the golden cross breakout. We're like, literally crossing up here, but now that selling's coming through, it's going to basically pull this line back down. So again, about 5.5 cents is my next target for it. But even on the longer term, guys, it's going to pull it down and put us undervalued with the longer term time frame and the 4-hour time frame, 180-day. So we should bounce off of about 5 cents to 5.5 cents, and we'll just have to see how it goes from there. I want to touch base a little bit on EEENF also. I know people were kind of freaking out over the price and everything and talking about selling and things of that nature. So that's a decision that obviously you have to make, and depending on how far you're down, I don't know, how many people are down or what the price is that you bought at and how much money you're losing. But kind of one thing I heard, Dave Ramsey uses this as it's called sunk cost analysis of, if you're down a certain amount of money, I get it, but let's see how much money. Think about the money that you have left in that position. Let's say you invested $4,000 and now you only have $1,000 left. If you had $1,000 on your coffee table right now, would you grab it and put it back in your pocket, or would you take that money and put it back into the company? And if your answer is I would grab it, then you may want to grab it. Or if you had $4,000, total or whatever you invested, would you take that money and rather have it, or would you want to put it back in that company? And if your answer is you'd rather have it in your pocket, then it might be time to sell. And you can always watch it and get in later, but I told you for that reason, that stock I'm not invested in, because I got burned on it a couple of times. I'd made money on it once, got burned on it twice. So it's one that we cover, but I just don't believe to invest in because super risky. Kind of like this one too. This one's pretty risky too. I do have more confidence in this one than EEENF, but both of them still extremely risky. So make sure that you don't put anything more than you can afford to lose. So keep an eye on the markets this week, guys, especially these 3 stocks that I'm talking about. Also, we're eyeing, again, check out my other videos. We talked about, keep an eye on Chipotle over the next several months. They are voting on a stock split, a 50-to-1 stock split, which is massive. So it's something that we can invest in for the long term. Other than that, guys, we'll catch you in the next one. Make sure that you like the video, share with a friend, and give me a comment and a subscribe.